Hey guys, well as expected, the Reserve Bank dropped the OCR from 3.5% to 3.25%. More interesting is the fact they didn't change their forward forecast, so the Reserve Bank still has the OCR reaching a low point of a smidge under 3% by later this year. Now what that means is you're not going to see too much movement in fixed rates. We've seen some of the banks lower their one-year fixed rates to 4.89% already, so only a small reduction from where they'd been, and that's all that I would expect to see. We haven't seen any headline rates on the 3-year fixed rate yet below 5%, but we are seeing banks negotiating to 4.99%. So that's great, and I think that's an attractive 3-year rate if you can get 4.99. So where to from here? If the Reserve Bank's to be believed, there's not much more forecast in terms of mortgage rate reductions. We could see the 1-year fixed housing rate drop to around 4.79. Given it's at 4.89 already, that kind of means we're at the bottom of this interest rate cycle from the Reserve Bank's perspective. Of course, the market's gonna make its own prediction in terms of what happens with rates, and for what it's worth, I think the OCR could go a little bit lower. People had been talking about it getting as low as 2.75, and if it gets there, then we'd expect to see a 1-year fixed housing rate around 4.5%. Whichever way you skin this, we are at the bottom of the interest rate cycle, so now's a good opportunity to think about what you really want. My recommendation would be put some of it on short-term fixed, some of it on a longer-term fixed rate, especially if you're getting below 5%. And that way you've got to bet both ways and you can't lose.